Hello, everybody. Welcome to the AutoUFOs Get Together session. Today is short term, so we're going to be executing trades for the short term. I actually had some trades running from before the session started. As you can see, I have the trade here. I will comment on this later on. Okay. But also, apart from having the trade running, I also had a collection of technical problems as I was starting the session, and this is the reason why we start with delay. And also, some of you have noticed that unfortunately, YouTube channel and Facebook were not running today. So if you're watching this recorded, well, you will be able to see it recorded because we will pause the video after the session is over. It'll be a manual post instead of a live streaming like we do normally. So apologies for that, but trading is more important. So now we need to focus on the trading, and then we'll focus on the recording, if that's okay. So let's begin. A disclaimer, as always. My name is Jose Blasco. Today is 11th of February 2019. Disclaimers: the following videos, clips, and demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Here we go. So we got the disclaimer out of the way, and now we have a trade running here, which I would like to give you a little bit more insight. Of course, this trade is running since the blue little arrow here. So this trade is running since 7:36 Central Standard Time, which is like 45 minutes now, and basically, which is a normal thing. Basically, the market has been doing the normal thing that it does before the open, which is everybody's waiting for the open to happen, and not much activity is happening. I personally like to take those trades a little before the open because it's a little boring at first, but then you have a takeoff, right? And if you're right on your plan, you end up reaching your further target quite quickly. And if you're wrong, you end up reaching your stop quite quickly as well, which gives you an opportunity to plan another trade quite quickly with little waiting time. So really, the waiting time is the one that we have in front of us, those like 40 minutes that I've been in this trade where not much have happened, okay? But as we're going to plan more trades together and execute more trades together, I'll show you a couple of screenshots that I have taken so you get to understand the rationale behind this trade, especially if you are new to our sessions and you have not seen the rationale of those trades before. So those screenshots will help you understand better why the trade was taken, so that way, as we plan new trades today, you will understand better the rationale. Okay, so this is a screenshot of my own screen. Let's call it 40 to 45 minutes ago. And the way my own screen was looking like is that in the bottom part, I was looking at the 15-minute time frame of the S&P 500 Futures. On the upper part, I was looking at the 2-minute time frame of the S&P 500 Futures. On the bottom part, I was using a 9 exponential moving average, 9-period exponential moving average, just to have an indication of trend. And as we discussed in the past as well, because computers trade those averages, and therefore the AutoUFOs app above is looking for on-field orders that are already in the market as we speak, while the moving average may represent new on-field orders to be added by computers once those markets retest those moving averages. And therefore, we have a trend indication that increases the probability of red UFOs to be taken out and increases the probability of green UFOs to work well. On top of that, as I just said, I repeat myself now, those moving averages represent a probability of new on-field orders to enter the market. So all of these together, in another way to say that is we are stacking odds in our favor while we manage risk and we maximize rewards, right? So the trade was taken with these green UFOs because the price of those green UFOs was around 27 15, which is also the price of the moving average, okay, at the moment when we got filled. Notice how the market tested the moving average. That's when we got filled with the blue arrow, and the blue arrow is also lining up with the green UFO. So that was the initial entry point for this trade. Okay. Since then, the market has been moving, up and down. Is doing its thing, and unfortunately, those green UFOs now are gone. We still have another one below. So, we are just following the plan. It's looking less pretty than earlier, because earlier, when the trade started, you had this initial bounce. Following the initial bounce, let me show you what happened a little later. Okay, and I took the screenshots on purpose just so I can, from an educational point of view, explain what happened. So from there, you got the blue arrow, and from there, this market was moving higher. As the market was moving higher, looking for this target one, we were now accumulating $125 of P&L at this moment in time. It was a temporary profit. Of course, it was not realized yet, so it could actually end up as a loss, or it could end up as a profit. I'm just showing you what was happening. And then I have a third screenshot, which I also taken, which I'm about to show you as well. And here is it. And, we went as close as one tick away from that target one. Okay, so it was a nice catch at that moment in time. And basically, this move kind of confirms or prove or demonstrate, or however you would like to say better. But it kind of makes the point of what it demonstrates the point of what I just explained earlier, right? So it was a good entry. Okay, now trading is trading. The app traders that you have been trading for a while, you probably know that the biggest challenge for a trader is not using the app, or placing the orders, or using TradeStation, or coloring the background of the charts in black or white or whatever. But the biggest challenge of a trader is the mindset. Okay, and here we were sticking to the discipline and the plan, and we went all the way one tick away from the target just to see, and this, my friends, is trading, just to see this market turn, move away against us, come back, 2 ticks away from the target, turn and move back to our green UFO, right? So again, we are still following the plan. We are still, in this situation where this UFO may push the price higher. The good news is that there is a lot of white space, a lot of room for the price to travel to the upper target. No green UFO, no red UFO has formed, which is good, but at the same time, it's quite concerning that in 9 minutes from now, we will have a close, and this close may happen below the average. In other words, the uptrend that was the motivation for us to get in 4 candles ago may have changed. Market conditions may have changed. We may be in a downtrend, and if that's the case, we will be stopped out for a small loss in exchange for a bigger profit, which is okay. But again, I wanted to explain the whole rationale of the history of this trade. So from a mechanical point of view, you understand what was done by the trader, but also, most importantly, you also understand the mindset behind the management of this trade. And this is now a bad news. Now a red UFO has formed, and that is now looking problematic on our side. And we talked about it in the past as well, that you could have certain roles. This formation of a red UFO could be a reason for you to close the trade. It would not be a bad decision, okay? But it needs to be part of your set of rules. You don't want to do it just because today you feel like closing, and then it's kind of like an emotional decision supported by the AutoUFOs app, but at the same time it's emotional unless it's written in your plan, okay? And in my case, as I said in the past, in case you are joining us since not too long ago, what I said is that during this month of February, and probably even March, I was going to take it super, super easy with very, very basic rules. And I'm just going to stick with the plan. I planned this trade the way I did, and I'm just going to stick with the plan and end up with either a profit or a loss. Whatever happens. I'm going to be professional and disciplined and stick with the plan because I had a reason to get in. So, I'm just going to stick with it. Again, the change of conditions in the market, like the red UFO forming, the change of trend below, these could be very valid reasons to get out. Okay, but we need to make it a rule, which we have not had the time to go as far in the supporting sessions that we do. And because we haven't had the time to go as far, I'm just going to keep it very simple, okay? But in any case, hopefully this beginning part of the session, it's a good beginning from the point of view of refreshing the methodology, one of the methodology we're going to use, because we're going to be working with FIBS as well. So refreshing one of the methodologies that we're going to be working on, and also gives me the opportunity to talk a little bit about the mindset of a trader, and also show you real stuff, guys, because not every trade is going to be a winner, okay? And it looks very good when the screen is full of green, but if it's full of green when we are together, and then when the session is over and you are trading on your own, then you get the red, and you happen to be on your own, you happen to be kind of isolated without support. When the red happens to you, well, then we cannot help you as well if you wish to get more green and less red. Is that making sense? So if a little bit of red happens to us too, it's actually a good news from a supporting point of view, okay? Even though in a perfect world, of course, I would like every single trade to be green, but that's a utopia, okay? So we need to be professional in that sense, okay? Very good. Yes, I'm reading your comment, Chris. Yep, got it. Makes sense. Very good. So anyway, so we have this trade running here, okay? And we're just gonna leave it alone for 5 minutes. Again, good news, 5 minutes from now, the market will open. This turning point that happened 4 minutes ago, maybe the low of the day, who knows, okay? Again, it's not a random turning point. There was a UFO a few minutes ago, correct? So, I had those two UFOs overlapping each other a few minutes ago. If I go back to the screenshot, just to make sure everybody is with me. So we have these two green UFOs other a few minutes ago, and if those UFOs created the low of the day, well, actually, it's actually quite doable. Okay, again, not too happy to see this potential close below the average. Okay, and that's problematic. But at the same time, the fact that this may be the low of the day, it would not surprise me if that's the case. Okay, because we had UFOs there. So good news. 5 minutes from now, the market will open, and if the market begins with a strong movement to the upside, we may reach our upper target. Okay, and that's why I was to this boringness beginning part of the day, because this boringness, which is not efficient from a point of view of usage of your time, that boringness actually sometimes bring a great amount of joy to the trader, because you get to see your trades move quickly to your targets, okay, or your stops, which is also a good thing, because then you can plan a second trade instead of being stuck for an hour and you don't know what's going to happen to your trade. 5-10 minutes later, you've been stopped out, or you've been reaching your targets, and you can plan a second trade very quickly. Okay, so personally, I appreciate that, and I'm making this comment as well because out of some of the emails that you guys sent, I know some of you are pretty busy people. If you wish, you have limited time to trade. Some of you, for example, you are in the European time zone, for example, so you're in the middle of your working day in the States. Some of you haven't started working if you work in an office, but in the European time zone, some of you are in the middle of your working day, and maybe you have an hour break during the lunchtime, and you're using that 1 hour to trade. Okay, so these quick in and outs, if you wish, are normally welcome by traders following this particular trade setup. Okay, so we'll see what happens in 3 minutes from now, because this is when the market will open. Okay, so a quick flash here on the left. Okay, a quick little flash here on the left. On the left, I have another workspace. It's called the UFOs Fibo lab. Okay, Fibo in this case is for Fibonacci. So I'm gonna come back here in a few minutes from now. I'm just gonna wait those 3 minutes to see what happens to our trades. I'm coming back to the EMA lab, where here we are combining the UFOs with the moving averages, the EMAs. The one on the left, we are combining the moving averages. Sorry, we are combining the AutoUFOs with the FIBS. Okay, two different styles of trading. Okay, two different styles of trading. Every style of trading got pros and cons. Mark is with us today. How are you, Mark? And Mark was sending a very interesting email to us for support the other day, and he was asking a little bit of a preference question. Probably you remember that, Mark. You were asking about, so what do you guys recommend better, the EMS or the FIBS? And really, there is no absolute answer because it has a lot to do with preferences of a trader. But instead of absolutes, what I would like to point is that everything in life got pros and cons, and you need to understand the advantages and the disadvantages of the FIBS, and the advantages and the disadvantages of the EMS, right? And one thing that happened with the FIBS, is that they stay the same for a long time, where the EMS, they change very quickly. So what happens if you are a trader who doesn't have time to look at your screen too closely, too often? Well, probably combining FIBS with the AutoUFOs may be a better choice because the FIBS stay the same for a long time. Where if you use the EMS, this would probably force you to look at your screen a little more often. Okay, a little more often. Why? Well, because the EMS move as price move, and the last candle on the chart will really impact the EMA. Okay, and I'm going to show you an example of that right now. uh, 1 minute and a half or 2 minutes, because I'm looking at my clock here on my side, and we are 20 seconds away from the open. So I just want to see what happens at the open out of curiosity, even though we have stops and targets. So really, it's nothing that we can do at this point. We just need to let the trade happen. But out of curiosity, 5 seconds from now, the market will open, and we'll get a better sense for the direction of the market in today's market conditions. Okay, so we'll see that. Okay, and here we go. So the market is now opening. Typical little fight at the beginning of the day, and we should see some movement happen. Okay, now in the meantime, below, take a look below. We had a formal close below the EMA, so we changed the trend from uptrend to downtrend. Some of you could certainly use that as a reason to close the trade, take $100 loss, and go plan a new trade instead of expose yourself to the full $225. Okay, I'm not going to do anything, as I said. I'm just going to stick with the plan, which is a valid choice. Okay, and we'll see what happens. Okay, but again, at the beginning part of the day, this is when many times you start seeing speed and direction pick up a little bit. So I want you to see it. Okay, because from an experience point of view, I think it's going to be a great experience to observe. Okay, we can see some strength going to the upside. Okay, so we'll see if we get to reach target one. If we were to reach target one, it's perfect, because target one, as you may remember from prior sessions, it's calculated in a way where if you reach this target and you unload half of the position, given the fact that the target was equal distance with the entry and the stop to the upside, and you remove half of the position, well, then you are now in a risk-free trade. And if that was to be the case, then we can go ahead and plan new trades, and it would be great to find ourselves in a risk-free position. Okay. But again, I'll let the trade happen. Okay, and we'll see what's going to happen here. Okay. Now, while we wait for this to happen, I want to go back to a trade that we left plan the other day, which was a trade on the British pound. Okay, and if I move to the left on this chart with the British pound, it was a 5-minute time frame. Okay, let me move to the left. Oh, I just moved the text. I didn't want to move the text. Okay. Here's the text. Here we go. So the last day we left, and it was here where we have the vertical line. That was the day we were together. Okay, and we plan a trade with an entry at 130. Okay, and the Great British Pound basically came like 1 pip away from 130, so you would have missed it. Okay, to be honest, but if you did, okay, you would have collected the nice profit that we define. Having said that, the reason why I'm pointing at this trade is because this trade was planned with the moving averages. Okay, and I think it's a great example that we talk about it, because this trade, you would have not been able to take the trade. And the reason why is because precisely since you were using the moving average, okay, precisely since you were using the moving average and the moving average change, well, if I was to place a vertical line at this point, which is the day of the entry, I was to change this time frame to 60, because you may remember we were using 60 and 5 on that particular day, and I was to activate a moving average. Okay, and I was to activate. Okay, so my computer is doing a lot of thinking. If I was to activate a moving average exponential with a 9 period, okay, I'm going to click OK. So at the day of the entry, the moving average is pointing up, is not pointing down, right? And you don't have a confluence with the UFO at 130. I'm going to have a vertical line, a horizontal line at 130. You didn't have a confluence with the average and the UFO, okay? So that's why I'm talking about this, because a few minutes ago, as we were waiting for the market to open, I was commenting on the pros and the cons of using EMS compared to using FIBs. If you use FIBs tend to stay the same for a long time, but the EMA keeps moving and moving and moving and moving and moving and moving. And this line represented the day you plan the trade, where this line represents when we get filled, even though we didn't because we missed it by one pip or two. But let's pretend we did. So what happens is that notice how much the moving average has changed, and you didn't have a confluence anymore at that time. Is that making sense? So if you are going to use the EMS combined with the AutoUFOs, basically what I'm saying is that you are basically going to be a trader who stay close to your chart and monitor your trades, and watch it. Let's call it quite often. If you're going to be a trader who use the FIBs, as we are about to do together, you will probably end up monitoring your trades much less often. So that makes you a little less active, okay? But at the same time, you miss a little bit on the momentum effect, okay? The momentum effect of using, an EMA, because momentum may be another word to define trend, and basically one way you could think of momentum is, let me see if you like this definition. One way on how you could think of momentum is, if you think about a market having a fair value, when there is momentum in a market, it means that the fair value of that market keeps being redefined quickly. Okay, when a market is sideways and boring and nothing's happening, then the fair value stay the same. But when there is momentum, the fair value of that market keeps being redefined, right? So when a market, because of whatever reason, could be fundamentals, could be a news, could be a change of economical reports, whatever that is, when the fair value of the market is being changed dramatically quickly, and therefore there is momentum, well, this momentum will be picked up by the EMA, and therefore the price to pay when you trade with the EMA is that you have to monitor it closely, right? Sometimes you have to cancel your trades, like you could have canceled here, or you should have canceled the British pound trade, as I just explained. That's the downside. But what's the beauty? Well, the beauty is that you do benefit from this momentum effect, where if you were to use the FIBs, well, you don't have the momentum effect built in your trades. But at the same time, you could be a little more relaxed when it comes to monitoring your trade and reviewing if your parameters are still in place and it's still okay for you to take the trade, or you have to cancel it. Okay, so everything in life got pros and cons, and I'm just giving you a little bit of both. And by the way, that's the reason why I'm using the FIBs and the EMS as well. So depending on who you are as a trader and what are your needs, I'm giving you choices to both groups. Okay. Anyway, how is it going so far, my friends? It's time to trade now. Now that I gave you a few explanations, we're gonna plan a few new trades and execute them before we go. How is it going out there? Could you please give me a quick confirmation so I know everything is fine? A quick yes, a quick everything is fine would do for me. Okay, thanks. Thank you, guys. Good. So let's go for it, guys. Okay. So let's begin with the fibs. I'm gonna start with the fibs because notice that the close that we have in the S&P is below the average, and we don't have red UFOs. So if I'm going to use, this technique, I really cannot, okay, because I don't have red UFOs. We may have a close above the EMA, and that will reopen the door for me to go long, because we do have green UFOs, but I cannot do it yet. Okay, I need to wait until the next multiple of 15, which is going to happen 6 minutes from now. So I got 6 minutes to move into my FIBO workspace. Okay, so let me turn off completely this workspace. I'm just gonna disable chart trading, even the matrix. Okay, I'm just gonna turn it off, so that way we're just gonna be focusing on the Nasdaq in this case in a 15-minute time frame, and we're gonna be looking for trades with fibs. Okay, notice as well, I'm using the Nasdaq to trade the 15-minute time frame, and I'm using the S&P to trade the 2-minute time frame. Okay, why is that? Well, because the Nasdaq has a point value of $20 per point. The S&P has a point value of $50 per point. Obviously, when I apply my UFOs to a 15-minute time frame, those UFOs will be wider. Okay, will be wider compared to the 2-minute time frame UFOs, right? So everybody, of course, all of you have a different type of an account for you to trade. Some of you have a large account, some of you is less large, some of you is larger. So everybody is different. But basically, to kind of make it equivalent or well balanced for all of you, well, for the market, where I'm going to use wider UFOs, I use the market with the smaller point value, which is the Nasdaq, $20 a point. And for the market, where I'm going to use narrower UFOs, then I use the S&P, which is a market with a higher point value. So it's okay to have smaller UFOs because my point value is more, right? So it's kind of equivalent, and that's the reason why I start this way. I could do anything else. Okay, I don't have to do it this way, but I'm just sharing with you the rationale, so I get you thinking about it as well, so you can have, you can put a little strategy into how you decide the markets that you want to trade out of this thought. Okay, now we're gonna trade the Nasdaq. Okay, using a 15-minute time frame. To do that, I'm gonna first go for the 4-hour. Okay, why? Because to do fibs, I need to find key highs and key lows. Okay, key highs, key lows, obvious highs and obvious lows. The best way to find those really obvious highs and lows is to change my chart to line. Okay, and when I change this to line, I think it's pretty obvious that we have a very obvious low here, a very obvious high, a very obvious low. Okay, a very obvious high, very obvious low, somewhere here, and then very obvious high. Okay, these will be the ones that catch my attention the most. And now that I got all of these identified, I'm just gonna go back to candlesticks. Okay, and now I'm gonna zoom in this area to adjust my vertical lines properly to the very low, because of course the chart I was using before, this one is fine. The chart I was using before was how do you call it, a line chart, and it shows only the close, where this being a candlestick, it shows you the high, the low, the open, and the close. Okay, and now I have high, low, high, low, high, and low. That's it. So what I'm going to do, now that I got my highs and my lows, I'm going to do my projections. Okay, to do my projections, I need to start with low, high, low. Okay, so that will imply I need to start here. And I'm going to click the button for the snapping mode. So that way it's going to go exactly to where the low is. So low and high and low. And then I'm going to do another projection starting with a high now, which is going to be high and low and high. Okay. Here we go. And then I'm going to go for the retracements. So for the retracements, I'm going to look for the high to the low. And then I'm going to look from the low to this high. Okay. And all of these will create a little bit of a mess on your chart, right? You have lines all over the place. It's difficult to understand, but it's okay because we did that in the 4-hour time frame. You now change to the 15 and you activate the UFOs, and automatically now we're going to be able to do a clear selection of what is relevant to us. Okay, so what is relevant to us? Well, this one is not. Okay, why is not? Well, it's a UFO and it's dark color, so actually it could be a good trade. Okay, but again, if you are using the rules with the FIBs, you have no confluence. So instead of using this one is relevant because you have one confluence. Okay, you have one confluence that makes it more relevant than the other one because again, the thought behind FIBs, okay, is not only to make you mechanical and instead of trading all the UFOs on a chart, just focus on a few and have a way to define which ones, which is mechanical, which doesn't imply you thinking or having opinions or preferences about it, but instead, just mechanically, that's it. But on top of that, remember the same rationale that applies to the EMS applies to the FIBs. Computers trade FIBs. And therefore, those numbers, in this case, 6984, that number may represent a new addition of on-field orders that were not in the market earlier that would now enter the market. Okay, that could be the case. Okay, so what do? Well, that one, we have a yes. That one, we have a not. And this, initially, I would say, you would be happy taking a trade there. What else do we have? Well, that one too. Okay, that one is yes. Okay, and we have a confluence. Okay, and the one below, the tiny one below, is also a yes. And you also have one confluence. Okay, the purple line, the magenta line, right? So here's your magenta line. Here's your magenta line. They are lining up with the UFOs. Okay, so those are yeses. Okay, those two, those are no. Okay, those are no. Not relevant. Not relevant. I mean, you could trade them by themselves and you have 66.85% probability of collecting some profit, right? So they are all relevant, to be honest. But again, if you are using this FIB confluence idea, then they're not, okay? So what do you do now? Well, now that you know this is relevant and this is relevant, you ignore everything else and you're gonna be planning on, because that one is relevant, you're going to use this as a short entry, okay? And you're going to use this, actually, because those two are together, okay? We're gonna use them combined, okay? We're gonna use them combined as a long entry, okay? So those two, we're gonna use them combined as a long entry. Oh, I'm just dragging the wrong text. Here we go. We're going to use them combined as a long entry because they are too close. If I was to use the one on the top and I was to place a stop below, the stop below would go in this tiny white space right there. That would not be useful. So instead of having my stop in this random place, I'm just going to combine them. And even though it's technically two, I'm going to treat them like it's one UFO. And that's going to be my long entry. Okay, so this one will classify as my long entry. Okay, and this one will classify as my short entry. Okay, now for me to take my profits, okay, you could certainly, if you go long using this green UFO, you can certainly take profit using the red UFO because there is nothing in between. And if you were to get short using this red UFO, you can certainly plan to take profits at the opposing green UFO because there is nothing in between. Okay, now if you want to be a little extra careful, well, here you can see you got 2 fips together. Here you got 2 fips together. So maybe this could be a good place where to unload some of your position. So this is going to be an area. I'm just going to have a rectangle here. Okay. I'm going to have a rectangle, and inside the rectangle, I'm going to write that there are multiple nested fibs at this level. Okay, and this for target setting could be important for us to know. So let's go ahead and plan those trades. So I'm going to remove all the lines on the chart that were so confusing. Okay, I'm going to get rid of everything. So now we have a neater chart. Okay, and the Nasdaq is falling, coming close to our green UFO. So we're going to be planning on an entry. So if we do a long entry here, the top of this green UFO is, let me move this down. I need to click on the green. So the top is 6917.5. So 6917.5. 6917.5. This is going to be your entry. Okay. The stop would go below the bottom UFO, where the bottom is 6902.75. So we'll make it 0.5, 6902.5. Okay. So we go for a stop at 6902.5. Okay, and the market is coming, so I'd rather do this quickly. So we have the stop at 6902.5, which is the bottom part. Let me double check this. Yes, correct. And then you could shoot for this ultimate target. Okay, but you need to make sure to scale out some of the position. Okay, so since it seems that around this price, 69.38. We have multiple nested fibs, and this, even though we don't have any red UFO, this may imply some price dropping out of those multiple nested fibs if those computers were to act intensively. So what I'm going to do is I'm going to take partial profits here and then run the remaining part of one position all the way to the next one. So 69.38. Okay, 69.38. Oh, I have a problem, guys. I got a TradeStation crash. I'm not sure. Yeah, so TradeStation has crashed on me. Here we go. Okay, so we're having good experiences today. Okay, we're having very good experiences today with a TradeStation crash and also with launching the session with a little bit of a delay. Okay, so I appreciate your sense of humor and your patience. Let me restart TradeStation so we can enter this trade, which look like it's soon going to be happening. Give me a second, guys. I'm restarting TradeStation on my side. Here we go. I'm almost done with the restart. Okay, so restarting TradeStation, guys. Little patience. Proper psychology, the proper psychology traits are the key for success as a trader, right? And so discipline is one of them. Patience is one of them. What else would you say is key for a trader to succeed? Anyone would like to share any thought? What is key when it comes to psychological traits? Let you write it. And since I'm asking you to write some stuff, what about you also type? And remember, this is something I'm only myself see, so I will not share it on the screen. But I would love it if you could type on the comments box, and you need to you need to not to be on full screen mode. So you just leave the full screen mode, and you will see your comments box there. So please type for me if that's okay. How long have you been trading? And how happy are you with your trading results from 0 to 5? Okay, so give me two numbers. Give me two numbers. The amount of time, how long you have been trading. So maybe you tell me 6 months, 2 years, whatever. And then how happy are you from your trading results from 0 to 5? Being 0, very unhappy, and 5, very happy. I would love to get to know you a little more in that sense. Okay. Good. So we have a transition back. Okay. I will undo chart trading, all of these. I will also turn off the matrix. Okay, and well, I'm not gonna redo the whole fib analysis, which I didn't save because I remember what were the UFOs. So very good point. One of you said that another psychological trait to succeed in trading is courage. Okay, and I will 100% agree with that. You also said stick to your trade plan, not your emotional reaction. Very good, perfect. And then I'm reading as well your experience in trading. Very good, guys. Thank you for sharing all of this with me. Okay, so anyway, let's do this quickly because the market is arriving. So we're gonna plan on a long trade, long entry. Is gonna be 69. I think it was 17 something, right? Let me see. 69, 17.5. Okay, so this would be the entry. We will have a stop located at 69, 6902.5, if I'm not mistaken. That was the stopping point. I'm going to change the color to blue. Okay, we also said that we will want to have a final target, but also an intermediate target. Okay, we said we want it to be 6938.00, if I'm not mistaken. So let me move this up here. So this is how it would look like on the chart, more or less. Okay, so and the final target is going to be 6985.25. Okay, so that would be the plan. 6985.25. Here we go. So that's the plan. Okay, and basically, if you do this trade, you have a risk of you have a risk of 6917.5 minus 69 6902.5. So we're risking 15 points. 15 points with $20 a point. This is a $300 race trade. Okay, and obviously your account should be. Wait a minute. I got my lines in the wrong place here. Yeah, more like that. So your account should be okay with this risk tolerance. If not, then this trade is not for you, and we'll plan another one later. Okay, and again, 6938. It was because you probably remember there was a yellow box here where we have identified multiple nested fibs, and these potentially could act as a technical resistance, and some of those computers may start selling at that price, and you don't want to find yourself in that problematic position. Okay, so I'm just gonna load. Actually, I'm not gonna do it with the matrix. I'm gonna do it with the chart directly. So right click, chart trading, and I'm just gonna place an order. I'm gonna use 2 contracts because I have 2 targets. So 2 contracts, attach an OSO. I'm gonna select 2 targets and 1 stop. Okay, so 69.17. Here we go. 69.17. I'm gonna buy 2 contracts. Yes, the order is in. Okay, and now of course I'm gonna have to update everything. I'll start with my target. I'll put it here, 85.25. Okay, good enough. 85. I'll adjust it later with the matrix, which is more precise. Yes. Then I need to move my stop. Yeah, something quite weird is happening with TradeStation. It just did a refresh or something like that. So 6902.5. This is because, be careful with this, because with chart trading, really, since I'm using 2 contracts, I actually have, since I'm using 2 targets, I actually have 2 stops. So if you move one, then you have to move the other one, which is that line you can see here, STM. So there is another stop above. So I need to move it down below to 6902.5. Okay, and the moment this is done, again, something quite weird is happening with my transition today, guys. I apologize for that. So I would move my target number 1 to 69.38, because this is where we had all those nested fibs. Okay, so I'm just gonna click yes. Okay, and that would be my plan, and the trade is in. Okay, the trade is in. The only thing I could do is I could get a little more precise to update this to 85.25, which is what we said we wanted. Here we go. That's it. So I got it. Okay, I got my trade, and now I just need to let it happen. Okay, same thing could be done into the reverse, which is, remember, this red UFO was also lining up with a fib, and you could go ahead and plan a short with the yellow box as an initial target and the green UFOs as a final target. So you could actually plan both the long and the short and leave them in the system, okay? Since we seem to be a little closer from the bottom part than the higher part, I'm just gonna leave it the way it is, okay? And we'll come back to see what happened in this trade, which probably will be the next session. But you know, this is a pick for you if you plan to execute this trade, okay? And Orlando, I see your point there when you are talking about a huge stop target. Again, it depends on your trading plan. This trade has $300 of risk. If it's too much, you can always try to plan the same trade with the Dow Jones Futures, which is $5 a point. Maybe you get a little bit less risk, even though you would have more points. This is something that you could actually check. Okay, but let's go ahead and go back to the S&P chart. okay, to the S&P. I'm going to move back to the S&P EML lab, and we'll try to find a trade for short term. And if that's possible, we'll put the orders in the system so you can get to execute the trade. Okay. So what do we have here? What do we have here? Well, the S&P is moving down. High 17.5, and the high here. Sorry, guys, I'm just talking to myself. I'm going to share with you now. Okay, so good. That's it. It's clear in my mind. So what was I looking at? Well, what I'm looking at is that the prior close is below the average. So we're in a downtrend. So if this market was to come back and retest the average and fall, or retest the average and falls, like it just happened, right? That would give us an opportunity to take the trade. It would be like the trade I was planning at the beginning part of the session, but it would be the reverse version of it. In the initial part of the session, we were planning to go long. This one would be an execution to go short. Okay, so what's the good news? Well, the good news is that the red UFO has a starting point located at 2715.5. So 17.5. Okay. Sorry, yeah, 15.5. 15.5 is the beginning part of the UFO. The current price for the current value for the EMA is 13.5. Certainly, if the market goes up, the EMA will react and will become 27.14, 27.14.5. But I'm not sure it would become 27.15.5, right? So basically, what I'm saying is that if you were to short using this red UFO, you may be shorting above the average, okay? And this could be problematic. Okay, this could be problematic because, you know, if this doesn't work in your favor immediately, you would be very, very likely going to see a close in the other side of the average, and basically you entered in a downtrend, and the downtrend just became an uptrend. Okay, and that would be basically wasted time and probably a losing trade in the end. Okay, or a break-even trade in the end. So I don't have a setup for me to plan anything that I would like to execute on the S&P. Therefore, what I'm going to do is I'm going to look at some spot Forex. I'm going to look at the euro. Okay, let's look at the euro. Because it's spot Forex, and spot Forex doesn't trade in a centralized market, I'm just going to move this to 60 and 5 instead of 15 and 2, just to be a little extra cautious. Okay, and this is going to make my UFOs to be a little wider. Earlier, Orlando was talking about a huge stop target, but to be honest, in Forex, I don't mind. And the reason why I don't mind is because in Forex, you can trade micro lots and mini lots and standard lots, and the micro lots are really micro. So you can trade with a very, very small account. Okay, so I would not mind even if the distance to the stop is greater, because still I can trade micros, which is very small. With futures, I cannot trade I cannot trade micros, and therefore Orlando had a very good point. Let me get your comment on the screen, Orlando. So Orlando had a very good point. But in the case of Forex, it gives you a little bit more flexibility. Okay, so what do we have here? Well, with the euro, we have a UFO around 113.34. The average is 113.05. Well, it's not going to work. Okay, so we're going to look for another currency. For example, the Great British Pound. The Great British Pound got a UFO at 29.53. The average is 28.96. Well, it's not going to work. What about the US dollar Japanese yen? If we look at the dollar yen, we have a UFO at 110.24, and here we got UFOs at 27 and 22. Okay, well, we got something here. Okay, if the yen drops into this UFO, we will have a confluence with the average, and notice how beautiful this is. touch the average bounces, right? So this is what we're looking for, which happens when we end up dealing with a market with certain level of momentum, okay? And this is well identified here. So let's go for it. Okay, let's go for it. Let's plan to join this trade. We'll plan the trade and then we'll conclude the session. Okay, what's happening with the Nasdaq trade? Just out of curiosity. Okay, it's still troubling around. Good. Okay, so it doesn't seem that the Nasdaq trade will execute before the end, but let's at least plan another trade, and we'll leave the session with those two picks that you guys can execute on your own if you feel like it, and of course you decide if you want it to be paper money or real money. Okay, that's, as always, will be your decision. So what are we planning to do here? We are planning on a long trade where for this long trade we will have a final target. Okay, let me write it again. We will have a final target somewhere above, which I will need to predefine. We will have a safety target, okay, somewhere that we will calculate mathematically. We will have a long entry using those UFOs that are lining up with the EMA below. And then in case we're wrong, we will have a protective stop, okay, which will be below. Okay. Now, again, we are dealing with spot Forex. We are dealing with spot Forex. And here is the tricky part for the ones of you that may not trade spot Forex. When you trade spot Forex, you know, if I show you an order bar, okay, notice that the price you see on the screen, which is 110.41.6, corresponds with the bid 41.2. Okay, this obviously keeps changing. So the bid is the price that you get on the chart. But when you buy, the price you get is the ask, because you buy from a seller and the sellers are asking. So before I type my long entry, where if this was futures, I would just look at the top portion of my rectangle, which is the UFO, and I will look at 110.28.5 as a long entry. Okay, 110.28.5 as a long entry. Instead of doing that, what I'm going to do is I'm going to change this to the US dollar Japanese yen .A chart, which is the ask. Okay, and I'm going to look at this top value of the box, which is 110.30. Okay, I guess you can see that it's 0.30. Okay, so I'm going to go back to USD Japanese yen. Okay, but now I know that my entry will not be 28.5, it will be 30, because I need to buy at the ask. Right, this is a little tip, something you need to do just because it's Forex. And then of course the stop is 19. Okay, so you can go with 18, 1 pip below, but again, because it's post Forex and it's not centralized, I'm going to add a couple of pips extra just in case. So I'll make it 16, just because this is a non-centralized market and different brokers may have slightly different quotes. Okay, so these are going to be the values that I'm going to be using. Now on the target side, I need to find UFOs above. Okay, and I got nothing. Okay, and this is probably because this market has been moving higher for a long time, and because it has been moving higher for a long time, and I have loaded 1,500 candles, I don't see anything on the left. So I got two choices. I can load more candles, okay, by formatting symbol and add more candles. Okay, so instead of 1,500, you can add, 3,000 candles, whatever. Or another choice is to go for a higher time frame. So if you were to look at the 15, okay, I still have no red UFOs. If I go for the 60, now I have UFOs, and the UFOs are located at 110.63.7. Okay, and I got 2. Okay, so probably something's going to happen when you get to this level. So 110, 63.7. Okay, I'm going to call it 63. So 110.63 would be our final target. Okay, so if I go back to the 5-minute time frame, okay, just to try to get a little bit of proportion, I'm just going to move this to 63, which is more or less here. And I'm going to move this down here. Okay, so we have the long entry at 110.30, the protective stop 110.13, and we are shooting to ride this move all the way to 63. So if you think about the size of the move that we're going to ride, I mean, it's decent enough, I would say. It's not going to be the best trade in the world, but it's decent enough to execute. So 110.63 minus 110.30, it's easy math, is 33 pip move that we're going to catch. Because our entry is 30 and our stop is 16, we are risking 14. So you are going to make 30 out of risking 14, which is a 2-to-1 trade. Okay, so you are going to make 30 out of risking 14. It's a 2-to-1 trade. Does that make sense? That's why I said it's not the best trade in the world, but it's a valid one. Okay, so here I have to say that I have a little problem with the safety target, because if I take my safety target, okay, if I take my safety target, and I calculate it manually, right? We got 14 pips of risk. So 14 pips on top of 110.30 is 110.44. So if I make my safety target 110.44 and I scale out half of the position at 110.44, it means that with 50% of the position, I will make a 1-to-1, which therefore that's a 0.5 to 1, right? And then with the other 50% of the position, I really don't know what happened to my text. This is quite interesting. Okay. I don't know what happened to my text. Interesting. So I'm gonna have to rewrite it. Good news, I remember the values. So final target 110.63, safety target 110.44, entry, that was a long entry, 110.30, and protective stop, that is 110.16. Okay, so if you take half of the position, okay, at a 1-to-1, that becomes a 0.5 to 1. And if you take the other half of your position, if you take the other half of the position out, so again, I'm having a little issue with the text. I don't know what happened, so I will not type it. I will just say it. So if you, with the other 50% of the position, you take profits at 2-to-1, so you would make 1-to-1, right? So 1-to-1. You will make a 1-to-1 with the second half of the position plus the initial half to 1. So the total performance of the trade would be 1.5 to 1. Where if I close the whole thing at target 1, I will make a 1-to-1, and I'm kind of putting myself in a position where to catch an extra 0.5 to 1, I need to catch double the size of the move. Okay, and so I'm not super happy about it. When my final target is more like 3-to-1, 4-to-1, 5-to-1, then I am very happy to use a safety target. But in this case, I would really make this safety target really optional, because to me the trade would not be really worth it to end up with a 1-to-1 or 1.5 to 1 only. So I rather expose myself to the full 2-to-1, even though I am exposing myself to the full risk. Okay, so that would be my thought for you, and therefore, depending on your mindset as a trader and your preferences, that optional safety target, you could choose to execute it or you could choose to pass. Okay, but here would be the trade. Okay, and that one does comply with the rule of the EMA and the UFOs, and all together we have a trade that is looking actually quite good in front of us with the US dollar yen. Okay, so now remember, the downside of using EMS is that you have to monitor it. Okay, if it takes a long time for this yen to come back to the green UFO, the EMA has changed in a way where now the value of the EMA is not between 110.30 and 110.16, but that value now it's either lower or higher, and therefore you should not take the trade because you don't have the confluence. Okay, we are looking for this. That's what we're looking for. We're looking for those tiny beautiful bounces out of the EMA. That's what we're looking for. Okay, so you need the EMA to line up with the UFOs, which implies you have to watch it. Okay, so anyway, guys, quick look to our Nasdaq trade, which I believe is still in the waiting process. Okay, so we just leave it there. So you have a trade with the Nasdaq that you could execute. If you want to take a screenshot, this is your time. I'll give you just a few seconds to take a screenshot if you feel like it, or if you haven't done it yet. And I will also show you the EMA here if you want to take another screenshot as well, so you can get that one. Okay. Let me see. Final note just in case. So I read everything you guys said. Yes. I read everything. So we are in sync with your comments and the content of today's session. Okay, guys. So anyway, how was today, guys? Would you mind to give me a little bit of a feedback? Was it good? Was it not good? Please be straightforward to me, just like I am with you guys. If there is anything in the session that you feel you are missing, let me know. If there is something you didn't like, please let me know. And if there is something that you like or something that is helping you, please let me know as well. You know, the good and the bad, because this is how I can adapt, and we can adapt better to you guys. So I would really appreciate a quick note at the end. Yep, see the NQ again. Let me activate the UFOs as well, so that way if you take a screenshot, it's going to be much more meaningful. Here we go. Here's the Nasdaq. Thank you, guys. So all good comments from you guys. Well, you are very kind to me. Thank you so much. Please don't be shy. Okay, and remember the comments that you type in here, only me sees them. If you feel like you prefer to send us an email because you want to be more detailed or you have to rush now, we also welcome that. The email address is reach@tradewithufos.com. I'm just putting it on the screen so you can have it as well. Okay. Very good comment. I love it. Mark. Good thought as well. The trade that I have planned with the US dollar Japanese yen, which is spot Forex, you can certainly as well look at the same trade using the yen futures. Okay, so your values would be different, but your UFOs would be or should be in the same location. Okay, so certainly you can kind of convert the spot Forex trade into futures. Okay, so if you get to execute that trademark, I would love it to know your end result, if it went well or not, and you don't have to execute it unless you feel comfortable, but if you do, I would love to see that. Okay. Yes. Very good question as well from Chris. Very good question as well from Chris. I'm getting your question on the main screen as well, because it's a very, very important question, Chris. Thanks for that. Chris is talking about the 67.84% here. So that's 67.84%. So what does that mean? Okay, that's Chris' question. Okay, well, this is a calculation that the app does automatically by looking at all the data that you have loaded on your screen. Okay, so all the historical data, which in my case, as you know, is 1,500 bars. Okay, it could be more, it could be whatever you choose. So out of all the data that you have loaded on the screen, what the app has done is to calculate all the UFOs and then look at what happened when price came back to the UFOs and calculate the percentage of times where price bounced from a green UFO and reached the rival red UFO, or when price got to a red UFO and bounced to the downside to reach the rival green UFO. In other words, how many times price bounce and travel from UFO to UFO? Because sometimes it may bounce but doesn't reach the rival UFO, right? Well, the question here is how many times price bounced and reached the rival UFO, and in this case, is 67.84% of the times based on the historical data you have on the screen. Okay, so something you may want to watch some of the YouTube sessions. Let me show you this very quickly. Thanks for that, Mark. So I'm just loading our website so I can show you something. Our website is right here. So if you look at, if you click Get Together, okay. Good. So if you get into the Get Together page here, and you scroll down, so you would, apart from the calendar, you would also get access to the YouTube sessions, okay, if you missed any of the prior get-togethers. So if you click YouTube sessions, okay, if you click YouTube sessions, so at least, well, as you can see today, something wrong is happening on my machine, guys, which is probably the reason why I'm having a few issues here. So apologize. But anyway, we got to the playlist. Okay. By the way, everybody click subscribe if you are not subscribed yet. Everybody, and then click on the bell. So that way, as we post new stuff, you get an alert. Okay, if you don't click on the bell, you don't get an alert. You don't get any email or anything like that. If you click on the bell, you get alerted. But also subscribe, so that way we can stay connected more efficiently. Because there will be times we may send communications via YouTube. Okay, so please subscribe. Okay. And what do you have here? You have many sessions. Okay, so Chris, if you go back part of the list, all those sessions that we did in November, December, before we started with short-term, long-term sharpening. So all those sessions that we did in the last year, many of those sessions, we talked about calibrating the tool, calibration, and this has a lot to do with the percentage calculation. And I was showing in those sessions how to go back in time and calibrate the tool in a way where your percentages remain constant no matter how long you go to the left. Okay. In other words, you make the tool to be really consistent through time with a proper calibration setting. Okay, so it's important that you watch that, because this could be quite useful. Okay, but anyway, guys, we are done with the session today. Thank you for your questions. Again, I appreciate your patience. We will see you soon, and soon is actually on Wednesday. Okay, soon is actually on Wednesday, where we will get together for longer term. We'll be talking about the options. Okay, Wednesday, 9 a.m. Eastern time. We'll be doing longer-term trading with options. Okay, and I know some of you ask us how to subscribe for the tool. So the way to do it is that you just click subscribe on our website. This will bring you to the button for the subscription, which is right here. Try now. So you click try now, and this will bring you straight into the TradeStation trading app store. Okay, and the trading app store of TradeStation, to be honest, is cool. It's really cool. It's actually the only app store that brokers have available, and it's very cool because you just click subscribe, and now automatically you log out and you log back in your TradeStation, and magic, the app is within your TradeStation. So it's kind of like you install an app on your phone. It's the only broker that has a tool like that. It's really cool. Okay, so please subscribe. So we can be connected efficiently. You can use the AutoUFOs, and then of course we'll support you during all those sessions that we do, and more to come. You may have noticed in March we have many more sessions. Okay, anyway, my friends, again, super pleasure to be with you today. We'll see you on Wednesday. Bye bye. Take care.